Today we're going to look at finding levels of significance. It's something more of an advanced module, and we're going to go through our methodology in finding these key levels within the macro, within the local time or the mid time, and this methodology is well sound, proven to be very effective. So let's begin. Let's begin with the candlesticks. So you should see these or this approach many times before. We'll click on the magnet, and I'm on the weekly chart on Bybit. Put that there. We use the magnet on the candlestick, and that is our weekly level. So what we'll do is we apply our template, and there we go. If you notice my methodology, we use the label slightly in, so when we do other labels, they don't overlap. For now, this particular one is more focused on the candlesticks, and then we're going to use ExoCharts to find the other levels, capture the wicks. So my method, I'll put the dotted line for the wick. Actually, I should have done that first. And then I'll put the dotted line to represent the wick for previous high. You can see what I'm doing, right? And then we'll do the same here. That's more local. So we've done the weekly there. Now that's covered, almost covered our levels of interest. So that's our weekly. And what we want to do is label these ones as well. If you can't be stuffed, well, I understand that. At times it becomes really handy just to label these. I'll finish this off and then we'll look at the monthly. That is the weekly levels completed for our interest. Now we're going to go on to the monthly. What we do is we go to the monthly chart and do the same again. And if anything, I should just make it a bit thicker. Monthlies don't come often, so we just leave it. If you can see, monthly there. That should cover it. And now we label these as monthly level, and continue on to the daily. Now at times I like using the 3-day chart for the dailies. Gives you, at some areas, it gives you a good confluence. So what I mean by confluence is that it's more reliable on a 3-day level than a single day level. And we'll do this, and then we'll look at from a daily chart. At times you might need to work out where the wicks are and levels of significance just by eyeing it out. You can see that was very congested. Now we'll go to the daily for that area and just help us decide potentially what the better level is. You don't want to do every single level, every single character of the candlestick. And you can see that was a good fit. There's one above there as well. And you can see this one here is also significant on the daily. So this one here, we'll use the bottom, and you can see that's confluent. Yes, we have a bit of congestion here. Let's just do it for now and then look for what's relevant more so later on. So that is our daily level. I would suggest that's the case there. And then we use more up here. That's a nice daily level. And we can say that this is also a nice daily level, although it's got the wicks. So what we do is we just make those dotted lines. And what I tend to do is I'll make it thicker, and then I'll do the dotted lines for the wicks. That should do it. So now we relabel all these as daily, and then we get our nice clean setup. Now we have reasons why we find this level as resistance. That's a daily level. Why isn't that shown? Oh, interesting. Okay, now we've got that out the way. We can apply Fibonacci as well. So now we've got all that. Let's apply Fibonacci. And there's a number of ways of applying Fibonacci. see 0.618 acting as resistance there. There we go. So we can see why this is going to be a strong resistance, guys. I will not buy into that. I'll look for a pullback here potentially, so we might get another wick there, another pull. Eventually should break through. Here we go. So our golden ratio has been hit, and also the time I'm doing this basically is the ETF approval. So it could pretty much break the 618 as well. People are saying it's priced in, but at the same time we're also a major resistance. Probably smart to short. Okay, so we've done our Fibonacci and we've got our levels. So let's hide these buggers and group them, and there we go. Liquidity. Right, now we're going to use our XO chart. And this is our XO chart. And what we're going to do is, this XO chart is actually a template that you can get from us for members only. And what we're going to do is we're going to use all the levels for our TPO and naked point of control. Okay, now we've got the chart cleaned up. We're going to apply our XO charts onto our TradingView chart. So what we'll do is we'll split this up. We've got a big screen, and we're going to apply our chart or the levels. So let's start with the weekly MPOC or the naked point of control. So we're going to define our template, and what we're going to do is do it again here. So what we do is we've got a level right there. This is a weekly naked point of control, and we've got to eye this out 58 or 56 9 56 946 56 946 56. Got a template weekly. That should do it. So that's our weekly naked point of control. Then we have this one here, 43 327 43 and that was taken out there. And what we want to do is, again, use our labeling. And we group them. So we can extract that from here, the one below, 37 658. 37 658. So if price was to fall, will you look at these levels as part of the strategy? So that's done for that. I'm not going to map all of it out. This is on Bybit, not perpetual, but USDT. Okay. Now we do the weekly TPO. This one's better. It actually gives us the values that's there. And we use our weekly TPO and just look at the chart values. And I'll continue doing this and I'll come back. So we've completed that. Let's see how we've done that. Put them into the other weekly. And now what we're going to do, we go to the monthly and do the same again. Pick out our levels. You can see there's no monthly up there. Ironic, but there is a monthly there and we've taken that out. So there's not much really we can do for the naked point of control. So our monthly naked point of control is what the value was that given 4382. And you can see how that actually played a role. Right there, acted as support on the monthly. Sadly enough, we don't have any monthly there. They've been all taken out. This one wasn't taken out, so that was the only one relevant. What I mean by taking out is once price crosses over that level, it's no longer valid. So this one's valid. This one's valid because price hasn't come down and taken those out. And so when all these are invalidated because they're crossed over, but this straight run, that could potentially act as support down the track. This one isn't because it's on the way up, it's invalidated. Here we have a point of control, 43,737. If that's the case, 43,7, yep, give or take 780, right. And we can say that is a monthly POC, all right, leave it there. As you can see what I've been doing. And now we can do the monthly TPO. And there's really nothing above except for this one. We've got two here. Monthly TPO. That's that there. And it's 43,425. And that's our monthly levels there. That one is 36,875. We're done there. So now let's go back. I was expecting this to complete. So let's go to the daily. We click on the daily naked point of control, and now we can see the daily's got much more granular. These have all been taken out. So we have one below and these ones above. So let's go start with the ones above. The daily naked point of control. They're more related to small time trading. Okay. Yes. Right. Do we want to do daily? It's taking a while, but you get the gist of it. We need to use the same, get the levels. I'm not sure why we're having issues there. And then we've got these other charts, but let's look at what we've got at this point on time. Now we can go to a small time frame. In our own trading review tool, we have this fixed range volume profile. So we're doing it manually now. And what we can do is apply it here, that range. We get the values. We've got that value there. And I tend to use the high value on this local session, relatively local. And there, and a point of control. Now these three are for my day trades. Just like December, January. And now what we want to do is remove that and now apply it to the bigger picture from here to there and see what that gives us. Upper value, point of control, and the bottom relatively the same. So we can see our point of control. These levels are becoming important, and what's taken place is price has gone up, found these levels of support, which is sort of confluence with the previous top as a resistance. So we found 3 or 4 4-hour candles finding a support, and then we got to push to the upside. Now what we're thinking is we can't really use that, so what we want to do is use other means. This is our Fibonacci level. That's our one golden ratio acting as support down there, and you can see the 1.618 there. What we've done is all taken out one liquidity, but we didn't take the other, and the price has gone back down again. Now what we're going to do is enable weekly point of control. So now we're going to start seeing areas that could be level of support. So if price comes down there, we will see these levels of support, the weekly point of control. Unfortunately, that's been taken out from what I see there, the wick, potentially. We've got our monthly. So our monthly. So this level is pretty important. If price was to come down, unfortunately, it's not a best place to look for a long, but if it comes back up, and then if I see regain this level, then I'll start becoming bullish. But that is a strong level of support. It's where the big volume is as well as here. So we expect a volume, a wick there. If a wick's below it and then goes above, it's still a good an SFP. We could go long, but then we take profits around these areas. So short term trades. So we've defined our levels pretty much, bar a few exochart local stuff, but that's how we get our levels, and then we start looking for main trades. So what we can do is start putting our dailies in there, our candlesticks. Now we forgot to add this on this section here, and we use the fixed range tool again, right there, the range. And then when we apply our levels, you'll see that this value area high is perfectly acting as resistance to that. You can see how that played its role. Value area high, it was acting as a resistance all the way through, as you can see that. Maybe make it blue just to match that. And then we understand that that was the main level of resistance. Then we got this breakout. We're doing the same thing again. And guess what? If we lose that level, similarly, we'd probably come down a fair bit. So that is a changing trend. At this point, we have a higher high, higher low, higher high. We cannot lose this higher high there. Once we lose that, it will come down more. And then we can think about that. Is that a corrective wave? So at this point, this level 44,291 is our bearish level. If we lose that, then we'll probably play something similar to this, where we do a corrective wave, And my guess is that it will be an ABC correction before we go to the upside. And in general, we have this strong move, and we can talk about the Elliott wave approach, what wave count we have, and so on. But this is not really about this at this point. We are just talking about using these tools to find our key levels, and you can see that key level there makes a significant impression, and therefore you will do a shorting. Long-term wise or strategy wise, if you look at this, and as you can see how clear it is and how precise it is, you have these trading strategies that apply to these. So here we have a swing failure pattern, comes down, another swing failure pattern that takes a top liquidity, and then we push down, and then we get this one here, which is a Fibonacci level. So if we were to extend this to the right, you can see it's our golden ratio, the Fib extension 1.618. So there you go. There's always an explanation. Here's our macro 0.5. We'll go 0.618. Now let's add our moving averages, our standard moving averages. So I'll go through the list. Our daily 21 EMA, especially for this trend. Our daily 21 SMA. And then we have our 30 weekly EMA. That is equivalent to the 200 moving average on a daily, or 200 daily EMA or SMA. So these are two, EMA and SMA. So you can see the 30 weekly moving average does a good job. Then we add our 200 moving average on the 4-hour. And the last one, we can add on our 50 moving average if necessary. So we can just have a look at why we're putting these moving averages. Well, in other trends for Bitcoin in an uptrend, the 20 moving averages and the 50 came in handy many times. And I'm finding that the 4-hour 200 moving average is an additional feature that I've picked up on. So you learn as you go which moving averages make sense. And if you look at the trend, you'll see that once we lose it, it drops a fair bit. And once we regain it, it moves a fair bit up. So that's what we have here. And you can see now from the remaining levels, we pretty much have everything covered. We have a formation that we saw in progress, which is a rising triangle of some sort. We saw a bit of a liquidity hunt over here. We saw that basically a reversal pattern, and that took out liquidity all the way through. And then we knew that it was, once it did that, we expected it to go make new highs. This is what they do. It's called a shakeout. So once we have all these levels, we can start using them in the short term time frame as well as the macro. The macro is usually Fibonacci. What I've done is with the macro Fibonacci, I've actually tweeted a bit, so the numbers changed here, 48,610, and it sort of falls in line with my strategy with the naked point of control on both levels. So if price was to go out, take the 618, and then we're likely to see that happen. And the liquidity is here, so anything above is pretty much the previous stop losses. So we're expecting that to happen. We could probably see that this range for a while, and then take out this level, and then pull back again, and maybe, just maybe, we get the ABC correction, and this could be a wave 5. There could also be an additional performance and take that out as well, which is another liquidity level. So that's possible. We can have two levels that will be interesting for the short. This ETF makes it a bit more difficult, but we're going to stick to our Fibonacci levels and then see what takes place. Ultimately, this is what we have with all these levels that we defined. In essence, we can look at the Elliott wave count. I think this is what's so far taken place. We are actually doing wave 2 to 3. There is that slight possibility that we actually did wave 1 and then doing wave 2. So instead of being wave 1 and 2 here, we can have probably wave 1 and 2 here on the macro. So imagine how high this could go. So we have that scenario as well. For now, I'll just leave it like this. We have 1, 2, 3, 4, potentially 5, and then our ABC. Now that's all Elliott wave theory, but when we look at Bitcoin from this perspective and we're looking at areas of significance, this is what we need to map out, and then we apply strategies for it. So let's have a closer look, just to sum it up. When we look at closer, we don't need these distractions with the Elliott stuff. Now you can see levels of interest. We've got the weekly levels, we've got the daily levels, and you can see how confluent they are. We've got the monthly level, and these are strategies that you need to know. They're not easy strategies, but swing failure patterns or failure auctions are what we see here. Swing up, that wick basically says it's going to go down, and this is the key part. Where is those levels? If you put Fibonacci onto this, it's not going to really help unless it's a key Fibonacci level. Moving averages in confluence with these key levels, which TPO or naked point of control, along with candlesticks and moving averages, and if you've got Fibonacci on top of that, it becomes a powerful method. And that's the purpose of this video, to make sure that you do your groundwork, get your levels ready, and then plan accordingly. We had this potential as a fake out, and it was a good shorting position. No one was expected to go that much, but there you go. If you had that level, you would have taken a short. There was a perfect short there, and you never know what kind of surprise you get. Similarly, like that, I did call this out in our group. I said that this moving average on the 204-hour moving average, along with this swing failure pattern, is a good entry. And look at that move that it did. And that was a good trade. And it's all because of the groundwork. And so you can see our weekly moving averages, a weekly level, daily level, and in along with, and I haven't mapped them out here because there's no point, but that we would have had some naked point of control in the local time frame. I haven't gone to that. That's another chart. That's a lot of work, but you use the same XO chart to find those levels. So I'm going to wrap it up on that, guys. Please give me a like and share. I appreciate it. Talk to you soon. Cheers.